Good evening all, or it might be another time if you are somewhere else in the world. Thank you all for joining. It's great to see you all tuning in from so many different places. If you can't hear me, do remember to turn your audio on in the bottom left corner. There's still quite a lot of people coming in, so I will just wait for a few more before kicking off. Hi, Steve. Hi, Paul. A few of you from Germany, great to see. My brother lives there. Many from Scotland, where I was born. Aberdeenshire, my mother had a shop there. Great to see so many tuning in. Okay, we're going to kick off because I know you've all planned your evenings. Right, let's get started. So today's webinar, it is all about how Stockopedia can help your investing process. This is an orientation webinar. It's an introduction to Stockopedia, and it's going to be especially useful if you are a new subscriber. I'm seeing some familiar names like Campbell Crockett, who might be a long-term subscriber. I would say this webinar is going to be best for new subscribers, for those of you in a trial, for many of you thinking of taking a trial. Colin, yes, you must know I'm from Brecon. And so it really is, everyone can get value from this webinar, but I do believe it will be best if you are early in your Stockopedia journey. So I just wanted to say that before we get started, so just to set expectations. This will be probably a 45-minute webinar. We have timed it, and we'll have a little bit of time for some questions at the end. So I'm going to get cracking now, and I will be playing a few videos, so interspersed between my slides. So how Stockopedia can help your investing process. Now, who am I? I am Ed Croft. I'm a chartered financial analyst. I'm the co-founder and CEO at Stockopedia.com. I started my career in private client wealth management at Goldman Sachs, and I can be found on Twitter on @EdCroft. And I managed a small fund after Goldman Sachs, but I was more and more a private investor. And as I was doing my private investing, I sort of found that many of the websites out there just were built for advertising, didn't have good data quality, and I really felt we could do better. So I had this sort of vision that we could do a better service for private investors, and that's where this all got started. The Stockopedia itself is a fantastic platform. It's got a wonderful community on it of many, many thousands of private investors. We've got a great editorial team. You can search for your stocks. You can check all the data we've got on them, which I'll be running through shortly. You can also, on your portfolio, use all the data to validate all your ideas, check your risk, your diversification. And we've got fabulous stock screener, and which can help you find many good new opportunities. And obviously there's lots of educational resources, and we're doing lots of education, and you can learn all about the site on the site. So there's so much to get stuck into. So the agenda for today, very much, I want to just quickly outline the founding principles of the site, because I think that's quite important to understand. I'm going to run through engaging with the community and with our own editorial team, and also those of you like you that use the site. We're then going to dive into validating your stock ideas using the proprietary data we have, like the StockRanks and all the other great data we have on our stock reports. We're also going to go and talk about identifying portfolio risks, which is a significant part of the site, which I'll be running through, hopefully show you some new ways to go and do that. And then we'll look at discovering new opportunities. You can, of course, find new opportunities by reading all the great research on the site. But in this section, I'm going to dive into the stock screener. And then we're going to talk a little bit about how to create more discipline in your investment process, and how to sort of repeat the process for more confidence and better results. So before I get started, I have to give a quick disclaimer. We are not a financial advisor. This is educational and informational. Stocks can go down as well as up, as we've seen in the markets with the bear market that we've been through. And I would like to very, very briefly say that if you do have any questions, our support team are there, but we can't give financial advice. So if you have any confusion on that, please do talk to a financial advisor. So let's dive into the founding principles of the site. because this has got a bit of a story. Now, I was going through some very, very old records of mine because I used to keep these journal items on every trade I did. And this was one that I bought in 2004. It was a Sardinian gold miner called Maduro Resources. And I bought it before gradually discovering that it would turn out to be a 90% loss. And I found this page and I thought I had to share it. I'm sorry, my writing is very, very scrawled, but it was bought on a share tip. And one of the things I did in my journal was I always put down my mistakes. There are sell reasons there, but I held this for so long I never wrote them down because I wanted to sort of crucify myself every time I looked at my portfolio for owning a share like this. So my recommendation to myself was not to buy on tips or rumors. Don't buy stocks with no earnings, profits, and don't average down. Use a stop loss. And so these early kind of lessons held me in good stead for a number of years. I did very well up till the financial crisis. But then in the financial crisis, my portfolio tanked by 50%. And that was a very, very galling experience. And that was around the time we started thinking about founding Stockopedia. And my co-founder, Dave, who worked in private equity, and we started creating a very, very large library of investment books, of academic research papers and more. And we really, really researched what works in investing to develop the platform, but also to improve our own investing. And the history of this goes back 100 years. And it really boils down to several key themes. And some of the most important factors in driving stocks are quality, where good profitable shares beat sort of junk shares, value, which is that cheaper shares tend to beat expensive shares, and momentum, which is strong shares tend to beat weak shares in terms of their price and trends. And the history of this goes back so far. Jesse Livermore was a great figure back in the 1920s, the great bear of Wall Street. The book Reminiscences of a Stock Operator was written all about him. And he was one of the first to sort of show that you could buy shares breaking out to the upside and do very well, and short shares that were going down. Ben Graham did terribly in that huge Great Depression and the stock market crash, but he came out of that with a new philosophy, which was that you should just buy with a margin of safety. And he wrote these investment classics, Security Analysis and The Intelligent Investor. And we've developed strategies that we host on our guru screens on the site, which are from these publications. And he just bought cheap shares. And he also taught very many investors how to use his principles. One of his best students was Warren Buffett, who is now the richest investor of all time. And there's been reams of books written about him, and another couple here, The Warren Buffett Way and Buffettology, that again we've modeled on the site, and there's been many other great investors along the way whose principles we took to bed into the kind of principles of the site and the data that we calculate. And beyond that, in the 80s and 90s, many of the academics were sort of more unusual names like Novi Marx and Eugene Farmer. They proved these ideas of quality, value, and momentum in their research papers. And they proved that using kind of databases and, all the fantastic computational resources that are now available, that classes of shares that were very exposed to these return drivers tended to outperform systematically. So what we've tried to do with Stockopedia is actually democratize these ideas by computing lots of fields into our rankings and our data that I'll be running through soon. So that's the core thesis of the site. Now, the long run returns to quality, value, and momentum have been proven in all of these research papers. This is from Eugene Farmer and Kenneth French's data library. And Eugene Farmer won the Nobel Prize for Economics in proving some of these ideas. And their data library shows that the top ranked quality, value, and momentum shares have outperformed consistently and beaten the S&P over the very long term. So that is why we do this. Now, this is a core principle of the site, is that we don't tip stocks. We don't recommend shares for buy or sell. We try and help you apply what works and come to your own decisions. So we do research shares. We have the data on the site. We do editorial. But this is very much to teach a man to fish rather than to give a man a fish. So we do this through the education, through the research community, and the very powerful data insights that we have in our database and on our stock reports. And these all empower everyone as DIY investors, like they do me. I use this as my only investment tool. And all of this helps reduce guesswork, to make data-backed decisions and gain discipline and results. And I think one of the most important things is it really helps take the emotion out of investing when you do it based on more of an empirically backed process like this. Now, going to the next point in the agenda, before I go and dive into lots of the tools on the site, I want to explain about engaging with our research community, because we've got a fantastic editorial team and all the many subscribers engage on the site and post comments and so on and so forth. I want to introduce some of our editorial team, because we do have actually a lot of writers on the site, including Megan Boxall, who's editor, Ex-Investors Chronicle, Paul Scott, who's our incredibly prolific small cap report editor. He's the ex-FD at a retail company. Graham Neary, who is an ex-fund manager, who's absolutely brilliant investor from Ireland and covers small and mid caps and does other reviews. Also, Roland Head often helps on the small cap report, but he focuses more on stock pitches and stock screening. And Mark Simpson, who is a subscriber too, actually, and the author of Excellent Investing, he also does stock analysis and screening articles. We also have contributions from professionals like Ed Shing, who's a CIO at BNP Paribas Wealth Management. And if you're in Australia, you may know Chris and Elio, and are running the operation down there, who have lots of experience in equities. Several others like Alex Keenan and myself do more sort of irregular contributions to the editorial on the site. Now, what I want to do is play you a quick video, hopefully this will work, to explain the research community. So I hope this comes through with good enough resolution for you. The research community at Stockopedia is an incredibly vibrant one, led by our experienced editorial team who scan the market daily for new opportunities, but also with the thousands of contributions from our community who add comments under articles and post their own ideas. It all starts on the Today page. In this research section, you'll find the latest articles published by our team on screening, small caps, market wraps, stock pitches, education, and more. You can click straight through from here to read the article in the article view. As you read it, you can like it if you like it, you can find out how many comments there are, who the author is, and see a link directly to their blog. As you scan down the article and read it, you'll see on the right here a stock widget that tells you all the key fundamentals about each of the shares that are mentioned in that article, including the symbol, quote, classifications, profile info, key statistics, including our famous stock ranks, as well as a chart which shows you the long-term history of the share. You can click through instantly for more and further information. Beneath the article, you can add a reply. This adds your comment underneath the article, which is a great way to introduce yourself to the community, which you will find is not full of the negative forces on unmoderated and non-subscriber free websites. You can also read all the comments underneath, and again, click reply to directly reply to any of those comments, which will thread it directly underneath. If you don't have a comment to make, please do like the comments that you read. It's really helpful for the author of them to know that they're getting read. In the sidebar, which you can pin, you will find links to all of our blogs, such as on small caps, which are written daily, stock pitches, which are weekly, which go in depth into different stocks week to week, a model portfolio written by me, stock screening articles, market analysis, and international stock insights. You can also, by clicking all posts, see the entire community contribution, which merges our own editorial and the contributions of the community. On your own portfolios, under folios in the sidebar, you will see that there is a discussion tab. That's a great way to find out if anything's been written specifically about the stocks in your watch list or your portfolio in recent times. And of course, every week we send a newsletter with the best publications from the community and our editorial team directly to all our subscribers. So please do check your email inbox. Our current publishing includes, like I was saying, the daily small cap value report with a really thriving community. It's a great place to find small cap ideas and to also test your ideas against the community who will give fantastic feedback. They're incredibly knowledgeable. There's weekly stock pitches, which are in-depth write-ups on shares that may be coming out of our screener, weekly screening features, which give you a lot more kind of scanning of all the ideas in the database. There's market wraps and analysis. there are model portfolios and educational articles. And of course, there's about 100 comments daily from the community. So please do join in and add your comments. Next up, I want to talk about validating your stock ideas, because this is one of the main value propositions of the site. Well, I like to use this QVM framework to understand what works in investing. So quality, value, and momentum. If we dive into that, some of the ways that we analyze company quality include long-term profitability across return on capital, looking at free cash flow, margin stability, growth consistency, but also looking at the improvement of the financials from last year to this year, including the interims. And we also look at some of the risks like bankruptcy risk and earnings manipulation risk to kind of give an overall sense of quality. In terms of value, we look at relative value, which includes common ratios that you might find out on the web, like the PE ratio or the dividend yield that everyone is normally familiar with. But we also look at valuation against sales for companies that don't have earnings, against book value, against free cash flow, and more. And then finally, momentum, which is to try and find strong shares. And this boils down to both strong share prices and strong earnings. And this comes down to price momentum, where shares nearer their one-year highs that are beating the market on a 1 year and 6 month view and also trading above moving averages, they tend to be stronger shares. Whereas earnings momentum is all about, are the analysts forecasting upgrades in the profits of the company? Are they upgrading their recommendations? And is the company beating their forecasts? All of these boil down into our overall StockRanks framework, which assess the quality, value, and momentum of every share from 0 to 100. So let's look a bit more at this. We publish these on every stock report. The importance of these factors is that essentially, if you look at the annualized performance in the vertical axis here on the left, if we bucket up the ranges of quality from low quality on the left to higher quality on the right, using our quality rank, you find that more profitable, more stable, higher quality shares tend to dramatically beat unprofitable, risky stocks over the long term and on average. This doesn't always hold true, such as in the pandemic when the unprofitable, risky stocks did extremely well and outperformed. But this is on the average over a decade. Similarly, in terms of value, you find that the cheaper shares, the bargain bucket of the market, has a tendency to outperform expensive, glamorous shares that often everybody wants to own. And lastly, strong shares, higher momentum shares, which are uptrending, have a tendency to beat their opposite, weak downtrending shares. And so this is something which boils into all of our stock ranks and our site philosophy. So when you use the stock ranks, it's a very simple thing to understand. It's a percentage scale between 0 and 100, where 100 ranked shares for quality are good, cheap, or strong, and 0 ranked shares you can think of as being expensive, weak, junk shares. So it's quite easy to understand. If a stock is ranked 83, that means it ranks 83, better than 83% of the market. If it ranks 50, like this share, it would be ranked as average in the market against those factors. And if it's ranked 18, it would be ranked in the bottom 18%. So it's quite easy to understand. We have these published on our stock reports, which are packed with lots of insights from fundamental and technical analysis, with analyst forecasts and major shareholder and director deal data. And David Stevenson at the FT reviewed us once and very graciously said they were gloriously designed and that they were a delight and incredibly easy to read, which really made me very happy. I'm going to play a quick video that goes into this in a little bit more depth for a few minutes. So let's click this and get started. One of the most common things you'll do at Stockopedia is sanity check your stock ideas and portfolio holdings against our powerful array of financial measures. You can search for any share using the search box. This brings up our stock reports, which are packed with financial intelligence. One of the first things you'll eyeball are the stock ranks. We rank every share for their quality, value, and momentum from 0 to 100 across an in-depth array of financial measures. You can also use the composite stock rank, which is a combined measure of all three. You can also see the trading data and the classifications across sector, risk rating, size group, and style, which gives you an instant fix on what that share is all about. The key actions at the top allow you to add the share to lists, print the view, notes, and alerts. Going further down, you'll see the chart, which charts not only the share price and moving average, but the stock rank over time. We also provide key statistics on growth, value, quality, and momentum, as well as these powerful traffic lights, which rank each of those measures, for example, the PE ratio, against the industry and the market as a whole. Thick and green in the metric shows that it ranks highly, whereas thin and red shows that it ranks poorly. It doesn't stop there. In the shareholder activity widget, you will see the recent dealings of institutions, directors, and the community as a whole, with links to click through for further detail. In the stock screens widget, you'll see some of our guru screens that stock qualifies for at the moment amongst our library of 65 screens. As you scroll down the page, you can eyeball the red flags based on professor scores of health trend, bankruptcy risk, and earnings manipulation risk. If you're a cautious investor, staying out of more distressed zone shares is a wise idea. The financial summary summarizes all the key 6 years of historic and 2 years of forecast financial metrics from the accounts, including measures of profitability, cash flow, dividends, and balance sheet items. This is a powerful way to get to know a share quickly over time. But it doesn't stop there. In the analyst forecast area, we publish the consensus forecasts that the Citi and Wall Street community are publishing on every share for their earnings per share, dividends per share, and more. We also publish the recommendation from buy to sell, as well as the trend in the financial forecast for earnings over time. Up and to the right is good. The profile summary section gives you all the key information about that company, including what it does, who the directors are, where the office is, and when the company reports. You'll also find any of the indices it's a member of, as well as any other listing information. News and company events, as well as the ability to compare with peers, do complete the view. And of course, when you're assessing a share, it really will depend on your own goals and what your strategy is. So if you're a growth investor, you may be more interested in earnings and sales growth. A value investor may look at the valuation metrics and try and find cheap shares, whereas a dividend investor might look for high yield stocks that have got good dividend safety. If you want to kind of know more about the stock reports, we have this fantastic extensive webinar, which you can find at this link. Lawrence might post the link in the chat in the sidebar if you want to bookmark that. So if you haven't seen that, go and check it out. It's a much deeper dive into those ideas. I also want to show you a quick video from Ted Scott, who is a former fund manager who can tell the story much better than I can.
My name's Ted Scott. I retired about 3 years ago, and I formerly worked as a fund manager for over 30 years. Someone recommended Stockopedia to me. I had a look at the website and found it very, very comprehensive, very user-friendly as well, and then that's when I started using it. When I stopped working, I didn't have research available to me. I wasn't able to meet company managements on a regular basis like I used to when I worked as well. So it enabled me to invest in companies with a certain degree of confidence that the research had been done through the website and through the tips on the website as well. So I'm very grateful to Stockopedia for enabling me to invest in these companies and not do it blind. And that's the key difference. Typically, probably 2 out of 3 stock picks underperform, whereas if you're using Stockopedia with the stock picking system, the stock ranking system, which is the sort of hallmark of Stockopedia, on average you will outperform. So there's no better recommendation than that.
So I'm going to move now on to talking about identifying portfolio risks, because once you've got around the data, you'll want to see your portfolio against this. So some of the common themes that I see in portfolios and some of the real risks that there are, for example, overconfident position sizing. And I really fell down the manhole on many occasions by doing this and believing that my own picks were going to dramatically beat the market. And often people also only own speculative stocks. And even worse is having too high position sizes in speculative stocks. So I want to talk a little bit about that. And also lack of sector diversity. It's not uncommon to see portfolios that are massively skewed into being single sector bets. And these are real problems for investors when the market turns against you. Let's have a little look first after sorry, I should have said, diversifying across sectors, sizes, and styles can create a much, much more resilient portfolio. So let's look at sectors, because we've got a 10 sector classification on the website, which go across three main themes. Firstly, defensive sectors, healthcare stocks, consumer defensive stocks like food, retail, and food producers, and utilities. Generally, like in the pandemic, these sectors did very, very well. And in bear markets, they tend to do well, although you have to be careful with biotech stocks in the healthcare sector that can be very speculative. There's also more sensitive sectors such as industrials, energy stocks, telecoms and technology, and cyclicals, where in basic materials, consumer cyclical areas like fast fashion or heavy consumer items like cars and fridges, and the financial sector, which, as we saw in the financial crisis, had some real problems. One of the illustrations I'll give here is from my own model portfolio called the NAPS portfolio, which in the 2022 bear market, the cyclical sector really, really suffered, and so did sensitives, but the defensives held up quite well. And that meant the underperformance wasn't as much as the market as a whole. So it's something I always think gives a lot of ballast to a portfolio. Now, next up, I want to have a quick look at the risk ratings that we do publish on every stock report and have available in tables. And this is really about how speculative your own picks might be. And we classify shares from conservative, which is where the share price can be expected to go up and down about 25% a year. But more balanced shares, which are a little bit more volatile, adventurous shares, more volatile still, up to 45% a year. Speculative shares that can be up to 70% volatility every year, but highly speculative shares, which are really amongst micro caps and much more risky investments that can have huge, huge volatility. And this spectrum goes from low risk to high risk. And we found that the most highly speculative shares have a tendency over the long term to underperform. In some cycles, they do extremely well, bouncing back. Sometimes in the pandemic, they did very well, but they've underperformed in general over the long run. Now, what I'd like to do is show you a quick video about the portfolios that shows you how you can use this. To make full use of the power of Stockopedia, you will want to upload your portfolio. This lets you identify hidden risks in your portfolio, as well as track the performance over time. And it's really easy to do. Hover over folios in the sidebar, click Create Folio, and then enter a portfolio name or a watchlist name, depending on what your goal is. Click Create, and you'll be taken to a naked page. Add stocks to build a watchlist. Add transactions to build your real portfolio tracker. When you add stocks, it's so easy to get them in. You can search across our database of shares and build that watch list. When you click Add Stocks, it'll be right there available to you. But I want to show you a quick way to get transaction data in. If you do have a CSV downloaded from your broker or a spreadsheet, you can just drag it in here. Go through the steps to validate that all the records are correct and click Import. When the portfolio uploads, you'll see a portfolio view with a special chart here that gives you the ability to track the valuation over time, as well as the performance as a percentage against your benchmark of choice. This is a very quick way to understand how your performance bears up against the benchmark you chose in different time frames. When you scroll down, you'll see a table view. This lets you look at the performance of each share daily against the market on an intraday basis. We also have a range of other portfolio views that let you track your percentage gain since you bought the shares, as well as your cost basis and more. You can customize these views as you see fit by clicking the Customize button. I want to show you the ranks view because we've got several of these views pre-rolled for you. Here you can look at the quality, value, and momentum rank of every share in your portfolio, as well as the overall stock rank. This portfolio I just uploaded has only one high-ranked share, but it has 6 low-ranked shares. This can be a risk, because while there's nothing wrong with holding more speculative low-ranking shares, after all, you've done your own research and you've probably got very good insights into them. If a portfolio is heavily skewed to lower-ranking shares, that could be a risk, as we found in all our tracking that lower-ranked shares have a tendency to underperform, on average, baskets of higher-ranked shares. You can also see in this view the risk rating. If I sort by that, we can also see that this portfolio uploaded has a lot of highly speculative shares. These shares are very, very, very volatile. And while some can double in a year or more, as a class, we found they tend to underperform except in some extreme market environments. There are other views available. So if you like scanning charts, you can view all the charts of your holdings at once in a glance. But I want to show you the allocation tab, which is up here. When you click it, you'll see your sector diversification as a pie chart and a bar chart here. This portfolio has heavy weightings to energy and basic materials sectors, but it has a very low weighting to more defensive sectors. As a portfolio of highly speculative shares with no defensive ballast, it could be actually at risk in a significant market downturn. Scrolling down the page, you can also see the position weights. Looking at the different position holdings, this one is quite heavily weighted in the portfolio, but some are very, very small, which means they won't necessarily contribute. This could be a good way to eyeball whether you've got a bit overweight on some of your holdings. You also have powerful news on all your portfolio or watchlist holdings, as well as the ability to see all the editorial and discussion that has come out on those shares related to your portfolio. There is also on the Today page a widget as you scroll down, which gives you a summary of different portfolios that you've uploaded, as well as your ability to scan all the news across all your portfolios at once. I highly recommend uploading your portfolios. We also have an extensive webinar all about the NAPS portfolio, which is the model portfolio that I've been running on the site for, I think, about many, many years. And you can, hopefully Lawrence will post this link in the sidebar. Please do check it out. It's a real deep dive into some of these principles, which may help with your own investing. Let's move on and talk about discovering new opportunities, because if you do identify any shares that you aren't comfortable with and you want to sort of find others, you can, of course, go and read the community, read the research that comes out, make your own decisions. But I want to go into the stock screener, which is a great way of finding new ideas. Now, the benefits of screening a database for ideas are very broad. But if you have a universe of stocks like the UK, which has 1,500 shares in it that are screenable in our universe, you might not know where to go, and that might lead you suspect to just relying on tips as an example. But if you use a screener, you can add rules sequentially, like, for example, screening for cheaper shares. I'm showing the value rank here, but it could be the PE ratio or the yield. You might look at higher quality shares. You might then add rules for higher momentum shares or some combination of these. And if you're a small cap stock picker, you might just segment it just for small caps. And if I actually add those exact rules on the market today, in the UK, I only find 17 candidate stocks, which is a great way of actually having a list for further research. There are three real ways of screening at Stockopedia. The first one is the Stockopedia screens that are based on our own stock ranks and ratings that make it very easy to get started. Also, the guru screens based on the famous investment literature I was talking about earlier. Many of the books are behind me in my bookcase. And also, you can build your own custom screens. So we have about 350 financial ratios that are available for you to use, which you can customize screens in any way you like. I'm going to now play a quick video about the screener so you can learn more about those features. Investment ideas can come from anywhere, from the news, social media, from our own research team and community. But one of the best ways to build discipline into your investment process is to start your search with a stock screen. You may find undiscovered gems that others are unaware of. There are many ways to do this on Stockopedia, but if you hover over Browse, you'll see under Stockopedia screens, categories of screens that are pre-rolled using our own proprietary data like the stock ranks and risk ratings. You'll also find underneath the set of categories of guru screens, which are 65 of great investment rule sets that we've crafted from the great financial literature, such as across categories like quality, growth, value, momentum, and more. Let's illustrate this by clicking popular screens. At the top here, you can see a direct link to the top stock rank shares on the site, as well as other combinations of the quality, value, and momentum ranks as you see fit. You can also see underneath some popular guru screens. If you click through to one of these pages, you can read more about it in the description at the top and find a link to further reading that we've written up. You'll see a quick eyeball of the rules with which this is crafted, as well as the performance tracking since we started tracking it many years ago. You can see for this screen, there are only 2 candidate stocks. It has very stringent criteria. If you're familiar with financial data, you can, of course, build your own stock screen, a custom screen. Go to Screens, click New Screen, and then you can add rules using this blue button. In the UK, as we can see, there are currently 1,500 screenable stocks. If we click Add Rule, let's try and find high-yielding shares. I've searched for yield, and I'm going to add it. And if I search for stocks with a yield of 5% or more, we can see that we've whittled it down to just 212 stocks. That's still too many. Let's add another rule. Let's look for the quality rank under StockRanks. If we search for 95% or more quality rank shares, there are now only 15 results, a much more manageable set from which to do further research. You can save this screen, give it a name, Quality Yield, and when you save it, it'll be available in your sidebar under Screens for future reference. One of the great features on Stockopedia is on any stock report, if a stock qualifies for any of our guru screens, you will see that it's tagged in this little box saying screens passed. This share is currently qualifying for 12 of the guru screens because it looks good across many financial metrics. That's no guarantee of success, but it does give some confidence. If you want to learn more about financial data to craft your own stock screens, click Learn, go to the financial glossary, and you can browse and learn more about any of our key financial data. There is 350 plus financial ratios which you can use in your stock screens. Good luck with your screening. I hope you find some great opportunities. So I'm going to go back to the quality, value, momentum framework to explain how some of the strategies that we've got in the screener and strategies you might find that famous investors use map to it, because I think this is quite enlightening. Firstly, if we were to look at someone like Terry Smith in the UK, who's famous for buying quality businesses, he says he just buys good businesses, doesn't overpay, and does nothing. He's a high quality investor. Whereas Benjamin Graham, the father of value investing, just tried to buy stocks that were undervalued. So he was a deep value investor, and that gave him his margin of safety. Whereas more momentum investors, let's say Mark Minervini, who I follow on Twitter, he'd say the trend is your friend, buy price action. He wants to buy breakout shares that have strong momentum. But it's at the intersection of some of these key return drivers where you find other strategies, such as Warren Buffett, who's more of a contrarian. He likes buying quality value or quality when it's been marked down, good, cheap shares. He has no interest in momentum. Whereas between value and momentum, you find turnaround investors who really ignore quality. They use momentum to try and understand when quality might be coming in the future. And James O'Shaughnessy, who's a great inspiration for our work here, he found that this strategy was one of the best since 1963. And we've actually found that as well in many of our stock screens. Also, at the intersection of quality and momentum, you find some investors who are happy to buy really expensive shares because they buy the highest quality, highest trending shares in the market. So when you come to craft your own investment philosophy, bearing this framework in mind really helps you try and fit a strategy to your own psychology and gives you an idea of further reading that might take it forwards. If you want to register for our extensive screening webinar, Lawrence will again, I hope, share this link in the sidebar, and we will be running that. We'll go into a deep dive into many of these ideas. Now, I want to move on to repeating some of these ideas for confidence and results, because things change in the market. Good shares don't stay good shares forever. And I want to give you a quick quote from Jim Slater, the late Jim Slater, a great inspiration for our work here as well. He said, "You sell a good stock that's performing well when it no longer meets your criteria. I try to buy companies that are special and sell them when they become ordinary." So let's imagine we want to pick good, cheap stocks. Let's map the quality rank on a vertical axis where good shares would be at the top and junk shares would be at the bottom. And also map the value rank on the horizontal axis. So cheap shares are on the right, whereas expensive shares are on the left. So in the top right corner, you would find good, cheap stocks, often a good fishing ground for value investors. Whereas at the other end of the spectrum are expensive junk stocks. Now, if you were to plot a holding, if one had picked well, it might plot up there. And if you actually picked a very good portfolio of stocks according to those criteria, it might look something like this. But of course, things change. And over time, you would see the rankings drift, the general quality of a share might drop based on results. You might find that the valuation changes when it rises or falls, and so on and so forth. And that leads to a big question: when to sell? So I want to talk a little bit about when to sell and how the site can help with some of those decisions. Now, this is some great research that a guy called Christoph Reschenhofer wrote called Combining Factors, which used a very similar ranking methodology to what we use at Stockopedia. And he mapped the optimal buy rank and sell rank on axes here. And in the green zones were kind of more optimal areas for buy-sell points. And I've liked to call this the 90-70 rank rule, which I use in my own investing to try and buy above a 90 rank and sell below a 70 rank. And that's one way to do it. But there are other ways of when to sell. There are other common approaches. For example, many people use a stop loss to sell when a share drops below the buy price to protect their capital. Some people use fundamental sell signals, such as when the PE ratio might reach the average for the market if you're a value investor, buying cheap and selling when it gets to the average. If you use technical rules, you'll be familiar with the idea of buying above the 200-day moving average and selling when it drops below it. And of course, there's more qualitative approaches that many investors use. They sell on a more discretionary basis when the investment thesis no longer holds. Now, I want to go and show you the alerts on the site, which can really help with some of these ideas. So I'm going to play a video again. Setting alerts based on fundamental or technical measures is one of the best ways to institute buy and sell discipline into your investment process. It's really easy to do using Stockopedia. On the Today page, you will see here a widget that says alerts. It shows you any triggered or waiting alerts and the ability to create an alert right from the Today page. You can, of course, do this from any stock report too. You'll find a button right here on the right, Alerts. If you click it, you'll be able to set them. But I want to show you how to do this from a portfolio. If you scroll down in the table view, in a watch list or your portfolio holdings, you will see these cog icons next to any of the shares in the list. If you click the cog, you'll see alerts, click it, and this modal pop-up will appear. You can set price alerts, stop loss alerts, fundamental alerts, technical alerts, as well as news and key date alerts. Let's go through in turn. Firstly, price alerts are pretty self-explanatory. We do show the current price, and you may want to get an alert, let's say if it falls through a certain level, or if it goes above a certain level for a buy indicator. Stop loss alerts or stop gain alerts are very powerful if you want to choose from, say, your buy date, and you want to choose a 15% stop loss, set the date, click save, and it's set. We're one of the few sites that allows fundamental alerts. You can set an alert based on the stock rank or other popular measures, and in fact, any of our fundamental data that we have available. I quite like using a stock rank less than 70 to help me institute some sell discipline on my holdings. We also provide technical alerts for those who like technical analysis. So for example, if you want to set an alert when the price falls below the 200-day moving average, you can do so. Now, when any of these alerts trigger, you will get a notification. Those notifications will come through both via email like this, with links back to the site, and on the site itself. Here we can see the one I set is already below a stock rank of 70. If I click the bell icon, I can see these. I can click through to the stock report, and I can see it also at the top of the stock report. It's quite easy to reactivate or just archive. If you want to view all your alerts, click the alert icon, click view alerts, and you can manage the full list of any that you've set across different stocks. I hope that you get a lot of use out of this feature, and it helps you create some buy and sell discipline in your own investment process. So I want to talk briefly about where all this leads, because we've had so many thousands of private investors use the Stockopedia service, and we've asked them how it's helped them. And we've got a couple here from a couple of subscribers who've been very generous in telling us their stories. And one of the things we find is that people tell us that before they use the site, they had a more unstructured approach or a haphazard approach, as John says, and often use tips from financial publications or magazines and the internet. And then using the site, and I don't want to attribute this all to us at all, because whenever anybody comes to the site, they're already on the journey of becoming a better investor. And James, I know and follow on Twitter, he's absolutely brilliant. But after some time, one has more discipline, confidence, and ideally better results. And you often see this theme that the decisions are more grounded in data and that they have more confidence in the decisions and are doing better against the indices. So that's very important. And here's a little story from Nick King. There is a bit of a jingle on this, but I'm going to show you this quick video to explain it in his own words.
My name is Nick King. Being honest, it was fairly difficult. It was probably looking at the press, internet, tips, not particularly structured, never felt fully confident about what I was investing in. Using Stockopedia, it's become far more sort of strategic, far more information is available. It's very quick to get that information. I can literally in a company decide within a few minutes whether I want to invest in it or not. So a lot simpler, speedy, no-brainer. It's had a very positive impact in terms of the research I've been able to do on Stockopedia, and my financial results have been far better as a result of having that information and the ability to make the best choices.
Now, we do survey our subscribers every year, and we tend to see the same themes, that our subscriber community, which are full of brilliant investors who probably would outperform anyway, but the impact, I think, is there, that we try and, with all the resources on the site, try and help you minimize your chances of underperforming the indices. And I think that's an important facet of what we try and do. And also, we also survey our subscribers for their confidence in what they're doing. And because this whole service is built around an educational ethos and everything on the site is clickable to learn more, and it really helps people build more confidence in their investing. And people very rarely tell us they feel less confident after they've subscribed with the site. So that's important. Now, there are some common questions I quickly want to address just at the end of this webinar. One of the ones that we do is, how do I get help? Do I get support on the site? And you'll find at the bottom right of the site a little green button, which if you click, you can then pops up and you can then send us messages. Now, we're not going to give any financial advice on this, but if you have any problems or you want help with something, you can send us a message there. Also, we have very many articles in here under help, which you can click and read on literally almost every feature on the site. And that's extremely helpful when you're getting started or just want to answer some questions. We're also asked regularly, do we have an app? Now, we don't have an app in the app stores like Google Play or the iOS App Store, but we do, if you load it up in your browser, you'll be prompted to add it to your home screen, which I've got on my home screen, and you can click it and you'll find that the whole site runs. You can get almost all the features that are on the main website on your phone, and it all loads very, very snappily, and you can read, you can view stock reports, you can track your portfolio and more. So it's very, very helpful. We're also asked regularly, where does the data come from? Now, we have relationships with some extremely wonderful data providers who give us the raw financial data, like Refinitiv, who service the whole institutional community, and specialist niche providers like Smart Insider on directors' dealings. And they often employ many, many analysts who scan, audit, and standardize the financial data, which we then import across many, many databases into our cloud on the Amazon Web Service for financial statements, price histories, directors' deals, and more. And what we do is we compute every day from the raw data, our own proprietary data set, 2,000 calculations on every stock every single day, from simple P ratios to Piotrowski scores. We rank and screen the market, and then we do our quality control before publishing it on the website. But of course, it doesn't stop there. We have a quality control loop that goes back to our data providers if there are any issues. And if subscribers ever find anything, we route things back to Refinitiv and more. So that's very important to understand. And our analyst team are always on hand. What stocks are covered? Well, it does depend on your subscription. But we provide stock ranks for 32,000 stocks around the world, across the UK, almost all of Europe, the USA, Canada, Australia and New Zealand, and many Asian exchanges. And we are hoping to broaden that coverage to some other regions going forwards. So that's really the core of what I wanted to say. So thank you very, very much for joining. I hope you enjoy the site, enjoy the subscription, the trial that you're in. And really, it's everything you need to improve your investing. And thank you very, very much for listening. I'm now going to go and jump into having a look to see what questions you've asked. And like I said, this is for new subscribers. Oh, thank you very, very much, all. It's you're being very complimentary, which is always very generous. Lots of work goes into these presentations, and thanks very, very much. Yes, we are recording it, Elisabetta. We will be sending out replay links and posting it somewhere. Thanks, Lawrence. And I will look at some of the Q&A, and let's have a little look. So just some questions here. I can probably pull up the site to have a little look around. Let me just do that in answering some of these questions. And there are some good questions here. There's some questions on the ranks, for example. I'm going to share my screen and look somewhere else. Hang on. Okay. Yes, I know. I mean, here's the thing, Anthony. Anthony's saying he bought a stock with the ranks and it dropped. And of course, this is the point. And if you join my NAPS webinar that I shared the link of, you will find a lot of information about how to use the stock ranks, because the important thing to understand is they're statistical measures. They work and have worked historically over baskets of shares. So in the NAPS portfolio that I actually have I've tracked it here. You can see that basically this is a 20 stock portfolio that is underperforming for the last year, but over the long term has dramatically outperformed. And this is a basket of 20 shares that I write about in the discussion area under the NAPS portfolio. And it's all about over the long term and buying baskets of shares. So, and in that presentation and that webinar that I run through in detail, I show that, for example, buying 1, 2, 3, 5 shares, there's a huge variability of returns. So in a typical year, we tend to see about 60% winners in the high stock rank set and 40% losers. So it's completely normal to see that there are a variation of results. Whereas, for example, in the very low ranks shares, which you might find, for example, if I go in here into the styles and look at what we classify as sucker stocks, in very, very low ranking shares, you tend to see this underperformance over time. So this is our tracking of very, very low ranked shares over time. And so baskets, you have to apply these principles across diversified approach, but obviously it gives confidence when you're doing your own investment. QVM provides historical information. Yes, that's absolutely true. But here's a few ideas and principles about stock ranks. So for example, I don't know this share, Zinnwald Lithium. It's a lithium stock. It's had a huge spike recently. This one has very low rankings, but the quality and value of the rank of the stock are all based on historical fundamental data from the company accounts. The interesting thing is, one of the best predictors of performance in the future is actually the historical data, and that's been proven in many, many, many value investing studies. But the momentum rank is based on forecasts. It is based on the price momentum as well as the analyst forecasts. This one doesn't have any, so it's completely based on price momentum for this stock. But if there are earnings forecasts, then they will go into the momentum rank. And of course, we're looking at the trend in forecasts, which is a key theme here, because you find that momentum is something of a predictor of future quality and future quality and future results. So while yes, the data is backward looking, it has to use historical data because we don't have the data from the future. You will find that across the whole market, these are very, very powerful metrics proven by the academic research and by our own tracking over time. So that's that. Of course, if you've got insights into what's upcoming, this is where your research comes in. you've done your own research on shares. You might know that Zinnwald Lithium, that I'd never heard of before, is going to have a huge market opportunity, and there may be upcoming news on that share. And that's really where the value of doing your own research comes in. I mean, one of the things to be aware of is what I always like to look at here, which is average shares. And the chart here shows that stocks that you can see in the chart, the number of shares in issue for this company have massively grown. There's now 253 million in issue, when a few years ago there was 31 million, which means that this company tends to fundraise huge amounts. And I've seen this a lot in a lot of shares. And Avacta, that my brother owns and is raving about, and it's doing quite well at the moment in share price and news. But once again, you see this endless dilution. And when shares are diluted, that means that private investors are diluted. And often you don't get to access placings and so on and so forth. So I find that blue sky shares, future value shares, very regularly do actually dilute investors. So it's something to be aware of. We will, I hope, be covering investment trusts in the future. I'm going to have a quick look. The quality rank, yes, that's an answer from Lawrence. No, we don't have plans for an API at the moment, CB, but I believe that we will at some date, but I'm not going to promise it. It's going to be quite far off. And let's see, can we obtain the slides? Well, we are actually building a educational portal that will be in our Learn section. And I'm hoping that will come out at some point during this year. And at the bottom, you can access, for example, the books. But what we want to access in future, we want to give you access to all the webinars, to all the slides, the PDFs we create, and more. And we're going to be doing lots more educational content going forwards. And we will also be solving, as Bob has said, the 10 portfolio limit issue at some point in the future. So please do understand that. We are catering for Aquis Exchange shares, but I would say that Aquis Exchange is the very small exchange in the UK. It's the old Plus Markets. It's changed so many times. It was Plus Markets, the next exchange, and OffX. But one of the things is we don't cover all of them. So some of the real tiddlers are not covered. And generally there are some limits at the very small end of the market to the coverage. An international portfolio can be tracked in one's local currency. So for example, if I create a portfolio, you can choose the currency. There are a few currencies available, not all of them, but that's another area that you can do. So you can use common currencies like euros and dollars and Canadian dollars, Aussie dollars, rupees, that kind of thing. Yes, so you can set up the portfolio currency. And let me have another look. What happens if you bought a stock in 4 or 5 separate tranches? Yes, well, I mean, this is another key point here. This is a demo portfolio, but if you add transactions, you can, well, actually probably better if I just show you on the NAPS portfolio here. If you go to transactions and I look, for example, at Indivior, there have been quite a lot of transactions in the NAPS year to year of this. So every transaction is tracked, and then they all go into a time-weighted return calculation and a sort of average, an average pooled cost on the basis of which that was invested. So the Indivior has had a bad year to date. It's sort of dragging the NAPS down, but you can see the cost per share there is in there as the average of any previous buys. You can use the, yes, you can use the screener for earnings momentum. And any of those ideas I covered in the presentation, you can do this in 2 ways. If you go into the screener and you click New Screen, and if you click Add Rule, you can browse the library. Now, many of those momentum measures are either split. Price momentum is in the Momentum tab, and you can do all kinds of price-related screening in there. You can look at price and volume, price strength, moving averages, highs and lows, and also some volatility measures. And under analysts, you will find things like broker consensus and number of buy recommendations. You'll find you're able to screen on things like earnings upgrades. For example, if I was to choose this and look at earnings upgrades, any share that has an earnings upgrade over the last month greater than 0, it'll be quite a small set, but that's 217 results. So that is a group of companies with recent earnings upgrades. So that's one way you can do this. Another way you can do this is in Browse. In momentum investing, I believe, we have a bunch of these stock screens. And there are a couple in here, like, for example, earnings upgrade momentum screen, and there's an earnings surprise screen. And if you click through, there's quite volatile returns on this screen. But you can see some of the rules here. For example, it's looking at upgrades in the last 1 month for second-year earnings, and whether upgrades are more than downgrades and that kind of thing. If you copy the screen, if you click that, I'm just going to get rid of that description, but it's a copy. I think I actually have to add a description, but you can make a copy of that. It will copy it into your own screening set. So that's something to be aware of. And is there a way I can use filters to list all the stocks that are available using QVM or the StockRank? Yes, again, 2 ways to do that. Go to Browse. You can either go to Popular Screens or Top Stock Ranks, but I showed Popular Screens already. And this Top Stock Ranks lets you see all the different stock ranks combinations that we have available. I'm going to do a more extensive webinar on this. But for example, if you go to Top Stock Ranks, you can then see the highest ranked shares in a list. Now, this one does have a cutoff of stock rank 90 plus. But actually, if you go to screens and just click new screen, this shows you the whole database just sorted by stock rank as default. And, you can paginate this to go and look all the way through. And, you can sort it based on the stock rank to invert it, to look at the low ranking shares. So it's a very easy way to do that. And if I want to look in one sector, for example, let's say the energy sector has done well in the last year. Let's have a little look at that. And that whittles it down to 100 energy sector stocks. Now, the other way to do that, if you're looking at sectors, is to go to Browse Sectors. And you can browse the 10 sectors we have, or the 52 industry groups that are listed here. So if I wanted to go into, for example, beverages shares, you could go in here into the sector listing page and look at them in here. Just be aware this does have dual listed shares in it as well. So that rather than the screener, which is focuses on more primary listed shares, and you can go and jump through different sectors as you wish. Vishal, yes, we have a limited set of technical indicators in the screener. Like I said, we do have moving averages, we do have highs and lows and some other indicators. And that is an area that we're seeking to improve going forwards. And let me have a little look. Do the alerts work on the intraday basis prices? Yes, they do. So we have delayed prices on all of our stocks in our universe. And that is all around the world. I don't know this share, but these prices are updated through the day, and you can find the latest traded price depending on which share that was. If I was to go and look at, for example, ASOS, you might see that the last trade was at 4:45 at the end of the market day. Now, our alerts trigger all through the day, but please understand our alerts are delayed. So they come through every 15 minutes. So we don't have live prices at this stage on the site. And so the alerts will come through like that. We also send all the fundamental alerts once per day. So if you set rules based on the stock rank or fundamental metrics, we compute those once a day. So the alerts will come when that batch is computed, probably before the opening. So Ross, this is a good example. Yeah, Ross has asked, Lee, we don't have a dark mode. No, I know one of our developers is super keen on it, and I quite like it too, but we don't at the moment. And so this is a very good question. So, for example, let's have a look at Shoe Zone. It's a good one that's come up. Now, Ross is saying that this one had a high-ranking share. It's done very well, actually, and rather annoyingly, we didn't buy it in our investment club. It was pitched in our staff investment club, and we decided against it because the stock rank was a little bit low. But you see, it jumped to 99, and it's had a very good run ever since, and it's been a really good recovery stock. And actually, one of the interesting things, I was looking at this recently, and they didn't dilute at all during the pandemic. And but Shoe Zone, the question was, it's got a very high quality rank, but it was flagging back in January with an earnings manipulation risk. It was probably flagging here as higher. Now, again, remember, these are all statistical measures, and there is some nuance around them. So you might see, and it does come up now and then, that there can be higher bankruptcy risk shares, which really kind of means they're over-levered in some way. And it doesn't necessarily mean they're going to go bankrupt, but it means you have to have some caution over their leverage and their sort of general financial risk. And the earnings manipulation risk is another one. But remember, again, like I was saying about the stock ranks, these are statistical measures that work across baskets of shares. So if you had a whole portfolio full of bankruptcy risk shares, it's probably going to do quite badly. And similarly with earnings manipulation risk or with negative health trends. Individually, there is more nuance. And again, that's where you come in. So sometimes, and we do factor them into the quality rank when these have a negative factor, and it acts as a decrement. But if there are enough other high quality metrics, it can overweigh them. So for example, just because it flags here doesn't mean we're going to suddenly rank it as 10, because it's a composite measure based on all kinds of measures. If you do want to learn more, just click the ratio and you can go through, see the full definition of each rank on one of our help pages, which is very helpful. And we're going to do lots more education around this going forwards. So I hope that answers the question. And the reason that it reverted to low, he's asking why it reverted to low, is most likely because it released recent results. So the year end was 1st of October. Those results probably came through in January. We processed the new data, and that would have changed the quality rank underlying and also changed the measures that go into these. So that's how they change. Someone said the quality rank tends to be the most stable of all the ranks. Yes, that is because both the value rank and momentum rank are based somewhat on price. So the momentum rank has price momentum. So if the share goes up, the momentum rank will rise. If the share goes down, it will fall. And similarly, if the share price rises, the value rank will fall because it's getting more expensive. So these two factors do act as counterweights to each other to a certain extent, not totally equal. And one can totally dominate the other. And it's quite, interesting to watch. But the quality rank is more persistent because that really, the vast majority, it only updates at the end of, whenever there are results. So on financial statements releases, they might be quarterly results, half year interim results, or end of year results. But they can nudge around a little bit because obviously they're relative rankings. If, let's say, a stock has a quality rank of 98, if a whole load of companies report and they're better quality than it, the rank might fall a little bit in the interim, but it's more stable than the others. And again, let me have a little look. It would be useful to have a recap of press stock tips. Yes, it probably would, but we're only resourced to a certain extent. But in the small cap report, which you can find on the site, often you find that they cover some of the interesting ideas that are coming from perhaps press they've read as well as the news, but mostly on the news. And yes, we are going to, I'm being asked about ETFs, funds, investment trusts. And look, we do have ETF price listings, but basically our development roadmap is that we're going to be increasing and improving the portfolio analytics first as the precursor to us getting in the holdings data on, for example, investment trusts, ETFs, and so on, which will allow us to create bubble up rankings. So there is an intention here, but it's a roadmap. We have a development roadmap, and there's a lot of things that need to get through, and we will be doing it, but I'm not going to give timescales. And let me have a little look. Yes, we are recording these webinars. More than 25 columns in the portfolio table would be helpful. Yes, Grant, I'm sure it would be, but one of the problems is that it just pushes a lot of data down the pipes, and we're really focused on performance. And the more data that we pump in, the slower the front end client side actually responds. So, that's why 25 is the limit there. And let me have another look. I'm just scanning the ones. Can I check if my favorite gurus have bought a share I'm interested in? And this is really interesting because I think it was TriFast I was looking at, which has unfortunately had a bit of a profit warning this week, and it's sort of fallen down a lot. But that was one that I spotted that Slater Investments had bought. And at the moment, we don't have that listed. So for example, if you click through, like I said, on the stock report, if you look at institutions, you can often see some are buying, and you click through to view, which you can also access from accounts, major shareholders, and you can actually see there. And again, this is another feature that I want. I want to be able to browse what Slater Investments are up to, or the Buffettology Fund is up to, and so on and so forth. So again, that's in the development roadmap, but it's again, it takes time to build these things. We only have limited resources, and we are not Bloomberg. So please be patient. And can you list upcoming dividends? Well, I would say one of the ways that I do this in a portfolio, if you want to see dividends, Now, this is a very low ranking demo portfolio, but if I customize this view and I go into dividends, you can actually put in the income, wait a minute, portfolios, which is a little bit hidden. You've got to scroll down here. Under portfolios, you can actually get an income forecast, which is quite useful. Now, if you add that, it will kind of give you the sort of forecast yield on each share from the brokers. There's a very strange one there, but that often is quite helpful. But it doesn't actually give you a list of those dividends that are upcoming. Again, another feature request, do send them in, click support, send in your feature requests. We actually have a library of 1,000 feature requests, maybe 1,500 now, because I used to enter them myself, but now the team do. And so you can imagine with such a complex domain as investing, we get a huge amount of feature requests. So keep them coming in, because at some point we'll be basically improving all of the data. The database will be actually, working through this in time. Can you screen for rapidly improving stock ranks? Again, that's something we want to improve, but there is a little workaround here. If you go on the today page and you scroll down, you need to check this every day, because the one bit of data we do publish is a stock rank yesterday and the stock rank today. So here's an example. Goldplat is jumped in, you can see this is stock rank movers. Goldplat has jumped from a rank of 67 yesterday to 92 today. And if you click through, we can see that this has jumped. So anyway, that's the idea. And basically, if you can actually use this in the screener to go and see all new 90 plus stock rank shares. So that's something to be aware of and you can use. And I'm pretty much getting through to the end of the questions. I've tried to cover what I can. I know everybody needs to go to probably get their supper like I do. So thank you so much for tuning in. And I am very, very pleased that so many of you have actually stayed so long. I really appreciate it. If you haven't taken a subscription, please do. If you are enjoying your subscription, thank you so much. I hope it's been a useful webinar and you've got some out of it, even if you are a long-term subscriber. And hopefully I've introduced a few things you might not have been aware of. But thanks very much for watching. I'm going to end it now. Thanks a lot. Take care. Best of luck in your investing and in these, tough markets. And, it's important to be so careful with risk. I can't say that enough. Be wise. The markets have had a good run recently, and you never know what's going to happen in tricky market environments like the ones we're going through. So wishing you all the best, and look after the downside. Cheers.